Hi everyone, this is Annie and it's September 18th. I have two pieces of news from China to share with you today. To begin with, let's talk about China's economic data. According to a recent article in Financial Times, positive macroeconomic data is leading to improved market expectations. Price data is showing signs of stabilization and recovery, and the economy is steadily rebounding. Additionally, it's expected that the interest rate gap between China and the US will narrow, leading to a positive turn in the Chinese yuan exchange rate. There are two key indicators that reflect this. First, positive changes in prices indicate improvements in both supply and demand. In August, the CPI shifted from a year-on-year decrease of 0.3% in July to a 0.1% increase. The PPI also saw a 1.4% reduction in the rate of decline compared to the previous month, turning positive for the first time this year on a month-to-month basis. These changes in price dynamics suggest that expansionary policies are gaining traction, market demand is steadily recovering, and the manufacturing PMI has been on the rise for 3 consecutive months. Exports and imports are showing smaller year-on-year declines than in July. China's economic growth is set to continue towards its potential, maintaining its leading position among major economies, and providing strong support for the Chinese yuan exchange rate. Secondly, the impact of the interest rate differential between China and the US is gradually emerging. The previous downward turn in prices in China created room for domestic interest rate cuts, while the US has been raising interest rates for over a year. This has widened the interest rate gap between the two countries and put pressure on the Chinese yuan exchange rate. As domestic price inflation gains momentum and the US approaches the end of its interest rate hike cycle, it's expected that the interest rate gap between China and the US will narrow, leading to a positive turnaround in the Chinese yuan exchange rate after bottoming out. With China's macroeconomic data signaling a positive trend and the early release of holiday travel demand during the Golden Week, we can further confirm China's economic recovery. Today's stock market preference reflects this trend, with stock related to hotels and scenic areas experiencing significant gains. According to data from the China Tourism Research Institute, the total number of domestic tourists during this summer reached 1.8 billion, accounting for 28% of the annual total. Domestic tourism revenue reached approximately 1.2 trillion yuan, accounting for around 28% of the annual total domestic tourism revenue. Many tourist destinations received record high numbers of visitors. It's worth noting that with the accelerated recovery of the consumption market this year, the tourism market has made a full-scale comeback, leading to many listed companies and the sector turning losses into profits in their semi-annual reports. If you would like to know more about specific stocks related to these trends, feel free to follow and leave a comment. I will bring you more news related to China in the future. That's all for today. See you tomorrow. Bye!